years, 3 years, and then you promise them, okay, after 3 years, we are going to renew this car, we're going to give you a latest car after that. And the trucks, vehicles, computers, fixtures, which is the AC and projectors and all those stuff, you install all these stuff into a business that supports your sales or your selling activities. Right? Otherwise, you don't, have so much expense on that one. Right? You bought a building, land, furniture, cars, truck. Why? Because that is going to be used to run this business. And your intention is that to keep them for more than 1 year. So did you see any business who is, buying every year, building every year, land every year, new car, new trucks, new furniture? It takes more than 1 year. Right? Kim, Minsu, you understand my point?
Yeah, I think I got it. Thank you.
Okay. So now the accumulated depreciation stuff. Sipade, your question. So you bought this building, furniture, car, and trucks, and you said that you are going to replace it after 5 years. Okay, I'm so sorry about that. Where we were here. So we bought them for more than 5 years or equal to 5 years. Cars, trucks, building, right? For example, you bought a car, $10,000, truck, $20,000, 18 wheelers, building is $2 million. The life is expected to be 5 years. So every year, their value decreases. For example, after 1 year, the car value remains 8,000, right? So how you are going to write it on balance sheet? You say car, you write it down original value, 10,000, and you write it down here, accumulated depreciation, 2,000. That would be the book value of car according to your books, right? So if you ask what is the value of the car, it gives you all the details. The value of the car, 10,000, how much you have used according to you, and the question is where this number came from. Different methods. When we talk about the depreciation methods, we'll talk about that how much the value is lost by the usage, right? And what it costs you right now is 8,000. It means if the company wants to get rid of this car, the company can sell it at 8,000. Second year, this is year 1. What about year 2? Is depreciation is 3,000, right? So how you write it down on year 2? On a year 2, you will write it down like this. Company value, the car value is 10,000. Now accumulated depreciation, 5,000, right? This year plus previous year. And that is the book value. According to you, according to your books, the value would be, the car would be right now after 2 years, 5,000. So your question, Sipade, if it's not going to give you a future benefit, then why we write it down here? Because it will give us a meaningful information which may benefit us. Even after year 2, it shows us that we bought this car for 10,000. How much we cost its wear and tear? Total 5,000. And how much future expected benefit that we have? 5,000. Sipit, do you understand? Similarly, with the
Yes.
buildings, you write it down like that. Trucks, you write it down like that. Buildings, you can say that, okay, this much wear and tear after a year and year basis. That's it. So the next one is long-term asset, long-term investments. So these are the investment in the stock exchange, like stocks and bonds of other companies, but your intention is that you are going to keep them for more than 12 months or more than a year, right? These are our resources. Yes, they'll give us future benefit, but that benefit is going to be received for after a year, at least after a year, for more than 1 year. It can be 3 years, 4 years, 5 years, 6 years, 10 years, who knows? And then intangible. Intangible mean which we cannot touch. For example, the property rights, like patents, trademarks, goodwill, right? You have a scientific discovery, you have invention, and you patent that for 10 years. And you say that for 10 years, we are producing this product from this method, and after 10 years, anybody can use our method, right? Nobody can copy our method.
For an example, like copyright, right?
Yes, it can be copyright, it can be trademarks, it can be intellectual property, any kind of intellectual property, right?
Okay.
So it don't have any physical form, we cannot touch it, right? But these are our assets. Understand? So this is the balance sheet example of our GAAP incorporation. It shows us the 2 years balance sheet, 2011 and 2012. So how they reported the assets? First, current assets. Under current assets, they mention in 2011, the value was 1,561, 1,885, right? So you see the short-term investments in 2011, it's 100, but now 0. Merchandise inventory, or you can just also write it down inventory. See, 1620 and 1615. They have also used other assets. In other assets, it can be prepaid and any other thing, right? You see here, so they segregated their assets into current assets and long-term assets. So they have also a total. So you see the total here, 1 line, not a 2 lines. See, the total 2 line means total assets. Let me just remove it here. So this is how you make this statement. Okay, see, a 1 line, and that's it. It means it is the total of all these. Okay, so you see here, current assets in 2011, these were 3926, but now 4309, right? They have increased. So these are just not numbers. They will give you meaningful information. Every number will give you meaningful information when you compare. And now the long-term assets, look at the head here. Long-term asset, we have property, equipment, and net. What does it mean by net? It means they didn't go through this stuff like property minus accumulated depreciation on property, and then we have net property. Instead, they just took that number and that number here. So there are different forms. You can write it down like this, and you can also write it down like that. So every company has its own policy to write it down. So don't worry about this. Where is the accumulated depreciation? Because it is already included here. and other long-term assets, right? So you see, the assets has increased in value. Now my question is, good or bad? Chloe, Jordan, Junpyo,
I think it's bad.
one answer is bad.
Yeah, I say it's bad.
Chloe, Junpyo, Min, Minsu, Misha, Ping Ping,
I think it's good. Good.
good.
I also think it's good.
I think it's bad.
Bad.
What do you guys think is bad?
Sir, I think we don't know. Answer is we don't know.
Okay. Any other options? Any other want to participate? Anyone else?
Yeah, I think it is also depends. Like, I don't know if I can tell good or bad.
Guys, what is the balance sheet equation? And what this shows equation?
That,
Worth of the business, right?
Hmm.
The position of the business or worth of the business. So your worth of the business has increased or decreased?
Increase.
It is good or bad?
Good.
Good. Your business position has increased. It's good.